Welcome back to another YouTube video of FOREX, where we make trading very simple. If you're new here, please make sure you do hit that subscribe button, comment, share, like more than anything else. In today's video, I'll be breaking down premium and discount, so watch till the end because there is some gems in this video. Now, before we get started, I just want to break down what premium is and what discount is, right? So premium and discount are basically price points or price ranges where we would be interested in buying and selling price, right? Let's remove trading out of the whole concept. Let's say you had some money, right, and you wanted to buy something. Obviously you'd want to buy it at a discount, and obviously if you had something and you wanted to sell it, you'd want to sell it at a premium price, right? So it's the same situation with currencies, with any other instrument that you trade, whether it's crypto, whether it's currencies, right? You always have to make sure that if you're buying, it's always discounted, and if you're selling, it's always at the premium, right? So today I'll help you identify how you can implement premium and discounting in your trading strategy, and how you can make it, work for you as much as it is. And I'll show you how I use it even in a live market chart example, so watch till the end. So now with premium and discount, right, the main reason why I love this whole concept is because it makes you understand the basics of trading. You're basically trading as much as it is. So you want to trade at premium and discounted zones, right? So the nice thing about understanding these points and implementing in your trading is that when you buy and you're selling, if you're buying low and you're selling high, it increases your risk to reward ratio, right? Or a winning ratio. So for example, let's say maybe we had 3 different points of interest, right? So this will help you for the people that, let's say maybe execute a trade and then it comes and it takes you out, and then you execute again and it takes you out. So this is going to help you understand where to get in, how to get those snapper entries as always. You get what I mean? So for example, let's say maybe we had a zone here. That's the first one. And then we had a zone number 2 over here, and then a zone number 3 over here, right? So obviously as an individual, you could come and take this trade over here. This is the first POI. You could get a clean 1:2. It's decent, but it's not that enough. You know what I mean? Yes, the trade could go in your way, but the chances of it reversing and going into the premium zone are basically like most probable. You get what I mean? So right, there's a second POI that's over here. This one is basically hugging the 50% zone. As much as it is, we'll highlight that, and then we take it all the way down here. That's still maybe a 1:3, relatively around 1:3. You get what I mean? If maybe we could do it like that, relatively 1:3. Yes, you could eat here, most definitely, but the chances of it also coming out and taking you out for, maybe you could go into profits for a while and then it comes out and takes you out for break even, is something that we're trying to avoid. So yes, right. So for example, if now you're planning on selling price, right, understanding that if price does get to the premium zone, this is where you'd be interested in selling, right? It is the most highly probable setup, and you must also remember your risk to reward ratio now. So now from a clean from a 1:2 to a 1:7, you get what I mean? And these are the reasons why a lot of my trades, or a lot of these people who are very good at trading trades usually are like sniper entries, because they're getting in at the premium prices, discounted prices. You know what I mean? They know what the market is telling them and how to execute as much as it is. You get what I mean? So this is what it helps you with, understanding your risk to reward ratio, and also increases your win rate, right? So what I use, the tools I use for this is basically a ganging box. I'll just pull out my toolbox here. So this is what I use. You basically find it over here. Let me just do it like this, over here, and then you go all the way down here. This is a gang box, right? So let me just click it over here, and then I'll just go to the settings right quick. Hopefully it allows. Yes, so here are my settings that I use. Obviously, maybe you could even make this yellow just to make everything look a little bit cleaner as much as it is. But yes, so those are the settings that I use for my ganging box. You usually find it around the point that I just showed you by the Fibonacci tool, and then you just go to the ganging box. So now here's the interesting thing about what do you call this, the ganging box, right, or the premium and discount. You use it, right? So to use it, you have to measure from the lowest point of the impulsive move to the highest point to the lowest point, right? Let's say we are in let's say maybe a bearish situation, right? So you'd come with the tool, right, highlight this point from the top to the bottom, right? Then you understand that, okay, cool, as much as it is, these are the points I'm looking at, right? This is the 50% zone, right? So anything that happens above this point is a place where you'd be interested in selling. So any order block, any fair value gap that you see here is a place where you should be interested in taking those sales, because it is in what? The premium zone. So you measure the whole impulsive leg, and then that 50% zone, you understand that I need to be looking at the premium point. This is in a selling situation, right? So yes. And then the best time to use a ganging box, or like what do you call it, a premium discount situation, right? It's best to always gauge like premium discounts on the higher time frame. So anything above the 15 minute, you get what I mean? Because as much as it is, you could get so lost, especially if you zoom in into the 5 minutes and the 1 minute, trying to figure out the thing, because it measures the whole impulsive leg, right? So from the 30 minutes and the 1 hours, right? So for me personally, it would be best advisable to use it on the 4 hour or the 1 hour time frame. As much as it is, for me, I use it mostly consistently on the 1 hour time frame. Why? Because of the situation of that, it's my entry time frame. You get what I mean? So yes, today's situation is mainly explaining the whole situation of premium and discounts, and then now we're gonna move into the charts, show you examples of how you can use this like more practically in the chart examples. You get what I mean? Now let's take it to the chart, right? So you can understand what I mean, and you can understand that the practical steps that I look for and that I take to help me get to this point, right? Hence how I made my own Fibonacci to get those entries, So it's the ganging box that really helped me with through back testing and understanding what the market really does over time. You kind of get used to it, right? So now let's just get into it. This is Nasdaq on the daily time frame. So now we're gonna just take the practical steps, right? So this is a full impulsive leg, as you can clearly see, right? We're gonna mark at the structure like we always do on the high time frame. We'll mark at that and that and that. That is the low, right? Clean cut finish, right? So okay, cool. We mark this out as a low, as a break of structure, my bad, as a break of structure. Okay, cool. So now since we understand the 2 points that are the swing points, we're gonna come and lay this out, right? So you must remember that this is on the daily time frame, as much as it is. So it is going to look a little bit choppy as much as it is. So I'm going to highlight all the points that I see, the points of interest that I would classify as places that I would be interested in executing, right? So we have this point, it's hugging the 50% zone. We have this supply zone. The nice thing about Nasdaq, it really does respect supply zone. So yes, I'm going to highlight that. And then we also have an order block over here. So I'm trying to do my best to be a newbie, right? I'm imagining if you were a newbie and you were just seeing this, you'd be like, okay, cool. Like, what are order blocks? As much as it is, you'd highlight the things that you see on the charts and be like, okay, cool. These are order blocks. This is an order block. So I'm gonna try and show you which are the most highest probability ones. You get what I mean? So okay, cool. Let's play price forward and see how the price reacts, right? So price moves up, obviously. So let's say hypothetically we take this trade. I just want to make sure that every single step that I take, you kind of understand and how I mean, right? So this one primarily kind of explains the whole risk to reward situation. So okay, cool. You target this order block. Let's say you take this order block, right? Remember that we are still in the discounted zone, right? So the trade can hit take profit, but look at the risk to reward ratio, 1:2. Yes, on a long time frame, you can not a long time frame, like on a longer scale, you could probably be consistent with the 1:2. But now we're looking at it as a long term. Out of those 100 trades, how many of these trades are going to be probable to work out like this, right? And this is what I'm going to show you what the discount and the premium actually does for you, right? So we fast forward price, your trade eventually hits take profit, right? As it hits take profit, obviously it's a 1:2, relatively 1:2. You eat, it is what it is, you move on, understandable, right? But like in most cases, these are the types of trades you get tapped in and tapped out. Why? Because price is still in the discount zone. Sellers are not interested in pushing price any further down. Buyers are still in control as much as it is. As soon as price gets into the premium zone, this is where you see a lot of selling power. You get what I mean? So okay, cool. We'll remove this order block because it has happened, right? And we'll kind of adapt with the market structure, right? We just need to wait for a pullback to happen. Okay, the pullback has started, so we kind of extend our gang box and then we highlight the zone, right? This is the initial order block that it reacted off, hence why it broke down all the way to the point, right? But we're still interested in seeing how price reacts as soon as it gets to this point, right? So cool, already we have these 2 POIs, this supply zone and then this one too, right? So automatically we'll put our sell limit over here, stop loss just above it, and then our take profit just below here, right? For 1:4 relatively, this is a very, very good setup. As much as it is, we can even put it just a little bit lower. Yeah, relatively 1:4, 1:4. So now this is the types of trades you'd want to take. You know what I mean? This is the types of trades you want to be involved in, because you understand that anything that can happen, you're willing to take the risk because you're risking 1 to gain 4. Imagine, you get what I mean? Okay, let's fast forward price moves up. Okay. So now we're currently in the premium zone. This is a zone where you should be interested in selling, right? This is a zone where your eyes should be like, okay, cool. The POIs and everything else is making sense. We've reacted off of this order block, right? Now with other confluences is like what is this? Liquidity as much as it is, you get what I mean? But for today we're focusing on the premium and discount situation, right? So we put our entry over here. This is where we're looking to take price down, right? So now price comes into the premium zone, taps us in, relatively taps us in. Let me just fix this order. Yeah, relatively taps us in. This is a clean cut finish. It is a sniper entry as much as it is. In hindsight, you get what I mean. So I just want to show you the power of a premium and discount. This is where price really moves away, right? So once price starts doing this, and obviously it eventually hits take profit, you get what I mean, for a clean 1:4. Like, I just wanted to show you the difference between this zone, the way it executed. Yes, it was impulsive, but as already you can see, this is the types of situations, if you were going to swing this thing, your trade was going to be hit for break even, due to the fact that like already there's not a lot of confidence to back up the selling pressure. You get what I mean? You're in a discounted zone. Not a lot of sellers are interested in pushing price down. Already, if you were to highlight the supply zone and execute in the premium zone, already you can already tell these 2 points that you're interested in. Even if the trade went to a stop loss, you could reevaluate yourself and take this order block on top over here all the way down. You get what I mean? So these are the nice things about understanding the difference between premium and discount, right? So we'll just run it back again, right? So initially we highlighted this order block, right? It respected it. It went all the way down. Take profit was hit for 1:2, right? But here we're looking at a win rate and a strike rate. So we need your risk to reward ratio to go up a little bit more. And the best way to do it is to execute in these types of zones, right? These types of areas, right? And I'm using NASDAQ because I know a lot of people trade it. So you understand the way it really likes to move, right? So now when you're interested in taking these types of trade, making sure that like premium zones and discounted zones are the places you're looking for, right? Now I want to move over to the bullish situation, right? So you can understand the different types of ways you can execute also on the bullish time frame, right? Or the bullish sentiment, my bad. So like now obviously we're on the daily time frame, same situation with NASDAQ, same situation again. You mark out the high, right? The low, I mean, and then now you kind of wait for price to kind of pull back to understand what high has been created. I can't mark this out as a high if there's no pullback that it has created, or what can we say, a change of character that happened, right? So okay, cool. So we wait for price to necessarily pull back. We do have some sorts of change of character over here, but that's for me not satisfactory. Okay, yeah, you see now there's some sorts of movement. Then we understand, okay, cool, we can highlight this as the top of the range, right? Clean cut finish. Then we take the Ganyan box over here to, this is the Fibonacci, my bad. We take the Ganyan box from down here all the way down here, right? So we understand, for those who mainly are color-based correlated people, so this is how we'll do it, right? So the yellow is obviously the premium, and then the gray is obviously the discount, right? So we understand this is the high and this is the low that we're looking for, right? Automatically now this is a different situation, and the nice thing about this is that there isn't really order blocks, but there is a lot of fair value gaps that you can see over here, right? So now it's a different situation. Here's a fair value gap over here, and then here's an order block right over here, right? So eventually, even here, we could mark this out as a fair value gap too. Over here, it didn't react to it as properly as we would like it to be, so hence why the thing. So let's just see how the price moves. As much as it is, price moves up, okay, it breaks down all the way low, right? So now this is the discounted zone, right? So eventually price comes into the zone very impulsively. When price comes in very impulsively, then you understand that it's a different situation. Sellers are trying to push the market down, but we understand that we're coming into a very sensitive zone, especially for buyers, right? Let me just highlight this zone too properly. So now, one thing about NASDAQ, or in most currency pairs, especially when you highlight the premium and discount zone, price usually, in most cases, when it comes and touches the 50% zone, it usually reacts in some sort of way. Usually that maybe is to create an order block for it to come respect again, so you can push lower. That usually that's the main case, but for now we're just focusing on the main concepts of like premium and discount, right? So right at this point has already been invalidated. Let's say maybe we did take a trade here, right? We risk 1%. Okay, stop loss has been hit. It is what it is. We reevaluate ourselves, right? Okay, cool. We move this thing. We understand that this is still a strong zone to buy. I mean, right? So this is the order block, the next best order block that we can see, right? So you'd come over here, put your sell limit over here. This is your take profit eventually, because it is the high, right? Let me just fix it up just to be clean cut finished. This is what it is. Put your entry over here, your stop loss relatively just below it, right? And then you let the market do its own thing, you know what I mean? Okay, eventually it taps us in very, very, very impulsively, but this shouldn't scare you as much as it is. We wait for price to move. This is at a sensitive zone, hence why there's a lot of movement, and the way it reversed as much as it is, right? So price does what it does, it reverses and then continues, comes back and mitigates this point. There probably is an order block on the lower time frames, but for now we're not really trying to focus on entries. We're really trying to focus on getting the whole fundamental of understanding that if your entries are based on these types of zones, it's easier for you to gain consistency because you're executing at the right places. And this is for my traders who are struggling to identify like the proper order blocks as much as it is, right? So price comes up, and eventually hits take profits. You get what I mean? This is a clean 1:5, 1:4. You get what I mean? Like I said before, like once you kind of get the market direction correctly and you execute at the right points or the right zones, then it's a bit easier for you to gain consistency, because stop trying to chase sniper entries all the time, because that will never work as much as it is. You know what I mean? The best possible thing you can do is making sure that you place your sell limit at a point where the market can come and respect you without suffocating your stop loss, and then letting price do its thing, letting the market feed you, letting the market run to your take profit. You get what I mean? But as much as it is, this is how the whole situation happens with premium and discounts. Please comment and please share if you're still having difficulties on the comment section. I really want to know if you guys want more of these types of content, educational content, or you just want to see me like breaking down pairs as much as it is, you know. But for now, it's Mr. Flair signing out.